What's going on, everybody? It's your boy Drew IQ. Welcome to another episode of Winners Win. Today, we're going to be talking about Netflix stock, ticker symbol NFLX. We're just going to be going over the latest news, giving kind of an update about this stock. Should you or should you not invest into Netflix right now? That is the question everybody's asking, especially right now with the stock price. And look how it has just been tanking. Okay, guys? So we're just going to go over everything Netflix today. I'm going to be giving my personal opinions and whether or not we should buy this, right? So just looking at Netflix, right? If we just look at the actual graph here, I don't want to do that. Sorry, there we go. Anyway, so yeah, if you just look at the graph here, for the most part, Netflix has kind of been growing at a fairly reasonable rate. At least the stock price, for example, has been going up, and goes back down, goes up. But at least it's been trending upwards for the longest time until recently, right? It has just immediately tanked. It is at pretty much the lowest I've seen it in over the last 5 years. Looks like the last time the price for this stock was this low was back in 2017, guys. All right, so in the last 5 years, Netflix is pretty much the lowest it's ever been. Okay, guys. So December 15, 2017 was the last time we seen it at 190. Okay, guys. So it was extremely low. But what's going on, right? What's going on with this stock? Now, the first thing I want to talk about really is what is going on with the actual earnings, right? So Netflix stock price drops 35%, biggest fall since 2004. Amazing, right? So what's going on? Essentially what happened was the company, released its earnings, and it really disappointed all of the investors. And not only did it disappoint a lot of its investors, it disappointed one of the biggest investors in Netflix. And that's what we are going to be talking about first here, right? So in this article, it's a little hard to see. Let's see if we can make it a little bigger for you all here. There we go. Anyway, so in this article right here, it's going to be talking about this billionaire investor, William Ackman, all right, whose fund bought more than 3 million shares of Netflix in January. But now that fund has sold its stake at a loss. That's huge, guys. This is a billionaire investor that sold his stake of Netflix for a loss, okay? That is a big deal, okay? Big deal. So this implies a loss of around $400 million, okay? This guy was willing to share his stake and lose $400 million. That's a big deal, okay? Because that means he thinks that Netflix has peaked, okay? And that's really what we want to talk about, all right? Because right now, if you look at the stock price and how much it's dropped, you might be like me, you're like, yo, is it a good time to maybe buy some Netflix? Is it a little overreaction? And to be honest with you guys, I don't think it is, okay? And I think the problem, what we're going to see here, is Netflix is having a hard time with growth right now. They've been on a very solid growth for many years now, as far as their revenue, as far as their subscriber base. But this was the first time their subscribers have actually gone down and they took a loss of subscribers. And it is a big deal. That means a lot of people are unsubscribing to Netflix. Now, what I want to talk about here is, let's see here, what is it talking about? Oh yeah, that's right here. We're going to talk about Molly Fool's article here, and they talk about, 4 red flags for Netflix's future when it really concerns about growth right now, right? Because Netflix is not a dividend stock. This is a growth stock. So we are going to want to see revenue growth of at least, 10, 20%, and make sure that this company is growing, right? This is what you're going to be investing for. You're investing into Netflix for that capital gain of appreciation, right? So if we look at some of these red flags here, I thought it was very interesting. The first thing they want to talk about is what I just mentioned, right? Netflix first loss of subscribers in over a decade. That is huge news, guys. Over the last 10 years, this is the first time Netflix has actually had a loss of subscribers. And this also coincided with HBO's how do you say that? Sequential growth. Thank you. Sorry about that. The sequential growth of HBO. And a lot of these other, services that are coming out and they're competing with Netflix, and they're kind of taking away some of the subscription base. Like Hulu, for example, is one of their biggest competitors, and it is also taking a lot away from Netflix's growth. Now, another thing I want to talk about here is when Molly Fools was talking about they're making a decision to chase after a lot of these shared passwords, right? Because a lot of us, I'm sure you guys know, just like me, I share my Netflix account with maybe 3 or 4 family members, and we all use it and we share our passwords, right? And Netflix has never really decided to crack down on that until recently. And that's why this is kind of really scary, right? Because why all of a sudden do they want to start cracking down on these shared password accounts, right? And what that means and what they're kind of saying here is it's indicating of them starved for growth. They're doing and they're kind of reaching and trying to figure out ways where they can grow, right? Right here, they're also talking about adding a cheaper ad-supported tier. So instead of paying maybe $10, $12 a month, whatever it is, you will have to just watch ads, kind of like Hulu, right? Hulu, I know you can have for free, but you have to watch ads. So it's gonna be a free tier, but it's gonna be ad supported. And both of these two things are basically kind of leaning towards, you know, Netflix is really starved for growth, meaning they're having to find other avenues to try and get this growth, right, and keep their earnings going up. And right here, and this is the big one, Bill Ackman liquidated his entire stake in Netflix less than 3 months after becoming one of its top shareholders. So their top shareholder just sold their stake for, like we said, $400 million loss. That's a huge deal. Now, and this is what I'm talking about here. This Netflix giant has been facing a lot of challenges, right? And what are these challenges? One is how can they keep their subscription base growing? They're kind of hitting a peak right now, so it seems. They can't seem to get any more growth, right? They're abruptly trying to do these, ads. But really, in my opinion, the big problem is their competition, okay, guys? Right now, the fastest growing is going to be HBO. HBO has had a large subscription base that has been growing year over year. And if you paid attention to my last stock where we mentioned, AT&T and Warner Media, they, in my opinion, are going to be a better investment right now. We're going to get into that a little later. But a lot of their competitors are just growing at a much faster rate right now, okay? So, in my opinion, like right here, yeah, see, HBO Max also recently rolled out cheaper ad-supported tiers. So this free ad tier that they're trying to add is not going to do much because HBO Max already has it. We have Hulu, and they have so much competition right now, right? They're going to start chasing those shared passwords, like we said, which is kind of the signs of that they're starving for growth. And this is the one right here, AT&T, right? AT&T, which owns the WBD spinoff, right? They own HBO and HBO Max, and this is what I was talking about. 77 million subscribers now on HBO and HBO Max. So it's an increase of almost 13 million subscribers year over year. And 3 million subscribers, this is the word we can never say, sequentially. Thank you. HBO's results aren't exactly comparable to Netflix's since the former includes both its linear TV and streaming video subscribers. However, it certainly seems like HBO is growing as Netflix shrinks. So that's the big thing right here, guys. For me, when you're looking at this company, it's really peaking. It's having a lot of competitors come in here, and they're really starving for growth, right? So let's go ahead and start looking at the numbers. Like, is all this news? Is it just news related, or are they actually struggling, right? So right now I have their financial income statement right now. We're going to be looking at the total revenue and focusing right here on the total revenue. If you look at this total revenue, ever since about 2016, 2015 even, they had about $6 billion. Oops. Gosh, I just pressed. What did I just do? I need to use my mouse instead of my mouse pad. Sorry about that, guys. But yeah, let's take a look here real quick. So if we go to the income statement, look at the details here, and look at the year-over-year revenue. So since about 2012, we made about, what is this, $3 billion in 2012, $4 in 2013. And as you can see, our total revenue has been increasing at a very solid rate. Now, if we look at to where we are now at about 2022, we've almost doubled since 2018. So we have an amazing revenue growth. But we're hitting a point right now from 2021 to 2022. There's not much revenue growth, if any at all, right? So we're kind of peaking as far as our total revenue right now. But at the positive side, we are and we have been growing at a very steady rate as far as our revenue is concerned. Now, where it really becomes a problem right now is where the earnings. This is where a lot of investors are kind of selling their stake right now in Netflix. Like I said, their revenue has been at a very steady increase ever since, even quarter one of 2020. They've been doing solid quarter over quarter here, right? But if you look at the earnings right here, this is the problem. The earnings are where they're taking a hit and where they're losing some of their money, and this is where they're losing a lot of their investors, right? Their earnings quarter over quarter is not at a very constant rate, right? This is only over the last 2 years. But ever since quarter four of 2021, they've been kind of taking a hit. And that's why William Ackman, their top shareholder, just sold his stake. Now, if you look at a lot of other analysts that are looking at Netflix stock, it looks like the average price target for a lot of them are around $302. So it is at a much lower rate than a lot of these, analysts suggest. But I think that's going to be changing here soon. I think a lot of these analysts are going to be updating their average price target here soon. But if you do, just take a look here. It looks pretty reasonable if you just look at the return. All right, the return on equity about 32% over the last 12 months. Now I want to go to the actual analysts. Yeah, right here. So on average, the price target is about 302, on low 235. So right now we are at $190. We're at the even lower of the price target out of all of these, analysts. Out of all of these analysts that are taking a look, the lowest price target is 235, and we're even below that. So if you just look at the price target, right, it's like, oh my gosh, this is at such a discount, and this is a steal. And that's why I wanted to start looking into this personally, because I was like, maybe I want to start buying some Netflix stock. This might be the time. But the reason why I'm not going to be buying any Netflix stock, guys, is really, I think the competitors are having a faster growth rate, and I would rather buy money into a lot of these other stocks in this sector. Now, that being said, I do think Netflix, if you want to purchase Netflix, I think it is at a reasonable buy right now. If you can buy Netflix stock at about $190 or below, I still think it is a good price for you to buy in. Personally, I'm going to wait until maybe if it hits $150 to $120. If it's between $120 $150, for me, that is a must-buy opportunity, and Netflix is a steal at that price point. But right now, even after looking at all these other analysts saying that, it's at a pretty cheap price point, I still don't like it, because the subscription base is, right now, we know for a fact, going down. The earnings are going down. The revenue's peaking. There's a lot of things that we don't like. The competition is getting harder and harder. There's more people making their own originals. We got Apple that we're about to talk about soon. But anyways, guys, personally, it is probably a good buy if you get it less than 190. I'm going to be waiting until about 150 for me to actually buy into Netflix, guys. That being said, if you do want to, buy or invest into this sector, I actually would recommend even Disney. Disney has Disney Plus. Disney Plus has been growing at a very reasonable rate, and Disney's price point has been tanking. And that is really just because of the whole market as a whole. Everybody right now is struggling. Every stock has been on the decline just because the market is struggling. But this is a very reasonable price point to buy into Disney. I personally think, I used to own Disney. I sold my Disney stock because it didn't pay dividends, and I am more of a dividend investor. And I have other stocks that are in the same sector, which we're going to be talking about here, like Warner Brothers Discovery. If you want to buy into, the streaming services, I would personally prefer HBO and HBO Max because they're growing at a much faster rate. And Warner Brothers Discovery, this stock is at a very low price point right now, right? And this is the stock. Yeah, look at this. 5 stars from Morningstar right now. This is a must-buy price for me. If I'm going to be buying in this sector, you're going to want to buy into Warner Brothers Discovery. That's what I'm going to be doing here, guys. I already have a little bit. As you see, I have about 11 shares. I don't think they pay dividends either, but if you're going off pure growth, I'm going to be investing into Warner Brothers Discovery because it's going to have a much higher potential for growth, right? This is a growth stock. It is not a dividend stock, so we really got to have that growth there. Now, another stock that you can buy right now is AT&T. This is at a very low price point as well, right? And their Warner Media services. But really, guys, what I would really recommend is you do a mix of actually Apple and WBD and AT&T. So for each sector, I pick kind of like the top three dogs, and I kind of invest into those three. Right now, for me, it's Apple, AT&T, and WBD, Warner Brothers Discovery. Apple is releasing Apple TV, and if you don't know, the Apple originals are killing it, guys. Absolutely amazing. We Crashed, Severance. Um, there's a couple other shows on there that are really popular that I can't think off top, but they're absolutely dominating right now. And I think Apple TV has a huge potential for growth, guys. Apple TV just started. Nobody even probably seen these shows yet, but me, because I'm a crazy TV guy. But I watch a lot of those shows, and I think they're fantastic. And I think Apple has a huge opportunity here to take over this streaming service market. So I'm buying a lot of Apple right now with a mix of WBD because HBO and HBO Max has been doing so well, and AT&T because AT&T is a dividend stock. So with AT&T, if you don't know, it is a dividend aristocrat. I just got paid my dividend of $13 here recently in May for that quarter. And they have a high potential for growth. So AT&T, you're going to get dividends and growth, and you're going to be having that Warner Media. So you're going to be having that, streaming services that you can invest in for this streaming sector. I personally love, Netflix, but right now, guys, it's just not growing as fast as its competition. And for that reason, I am no longer investing into Netflix unless it is at $150 or below, guys. I do think it is a fair value for $190 or less, though. So if you do love Netflix, you do believe in the company, go ahead and buy some. I don't think it's going to be a horrible choice. But like I said, I personally would think either Disney, WBD, AT&T, or Apple are going to be better buys if you're just going to be investing into this sector, streaming services. All right, guys, that being said, that is going to be it for today. Thank you for stopping by. Please like, subscribe, leave a comment below if you have any other stocks you want me to take a look at and give you an update on, or if you just have any questions. I do read all the comments, guys. But thank you for stopping by, and y'all have a good rest of y'all's day.